So we're going to talk about a phenomenon that happened in the last week because everybody was euphoric. The Fed dropped the interest rates and things were going to get really good really fast. And then we checked a few days later, the interest rates kind of went up for some reason. And I thought I'd explain that, what's going on with that and how it affects you ongoing. This is your host, Ron Wojciechowski for the Black Hole of Real Estate. And yes, the Feds did bring the rates down a quarter point at the last Fed meeting on September 17th. And while that is a good thing overall, one of the things we mentioned along the way that might have slipped through the cracks was that the market, the lenders, the banks had already priced in that quarter point drop. They anticipated that it was coming. So in the days leading up to it, banks compete. They want your money. They want to lend money out so they can make more money back. That's their arbitrage. If they can borrow from the Fed at 3 or 4% and they can loan it to you at 6 or 7%, there's money to be made. They like that game. What happened was they got aggressive. They priced the reduction in before the meeting to gain more market share. And at the point where they finished the meeting and said we're dropping a quarter point, the only way that rates were going to go down any further would have been to do a half point drop. And they didn't do that. And if we go back through some of, the podcasts that we've done here, we talked about that price is priced in. And that's going to cause rates maybe to not go down or even bounce just a little bit. And that's what happened over this past week. I don't think it's a long-term situation because I think there's more rates drops coming at future Fed meetings. I think the next two, you'll see a quarter point in each one. But now that we've seen this play out, because this is the first rate drop in almost a year. If you remember before the presidential election back in 24, three consecutive meetings dropping the rates. And you can put in your own thoughts and reasons why that might have happened. But let's just keep it purely, economic and that the Fed is independent of the executive branch. They probably did something in the name of dropping rates, either because they saw that inflation was easing or there was something in their indicators, maybe a jobs report that allowed them to do that. So we'll just take it that way. What's interesting is apparently all of the economic indicators were uncertain for the last year up until just last week, and they kept the rates the same all year long. So we really haven't experienced anything like this in a year. But now that we've had a rate drop, in the anticipation, the smart money was that it was going to drop a quarter point on the 17th of September. It did. The banks all priced it in. So the next day, it's like, hey, we took in a lot of business the last few days, a lot of savvy mortgage buyers and people investing money using mortgages, I guess where I'm going to, they locked in at the exact right time for the month of September by doing that on the 13th, 14th, 15th, 16th, whatever day they locked in. That's where the smart money was last week. And on the 17th, they really exhausted really every opportunity to get a cheaper rate in the days ahead. So what's next? What we're going to find is when they do the next Fed meeting, there is going to be anticipation for another quarter point drop. So watch for it in the 7 to 10 days ahead of that. We'll remind you over here when that meeting is coming and why it's going to be important. It won't be until end of October, so you've got time. And then there'll be one in December. I think the 9th and 10th, I think what you're going to find. October 28th is the target date for the next reduction. So the week leading up to that is probably another sweet spot where the rates are going to go down just a little bit, maybe a lot of it. Now, what would be really remarkable is if the market anticipated a quarter point drop and then it dropped a half point. That would make a considerable difference where the days leading up to the Fed meeting announcement, you'll see the rates go down just like it did this month. And if there's a subsequent bigger drop, if that means a half point instead of a corner, it might drop a little further. And right now, I believe it's going to be a surprise if it happens. At this point, the market is saying, okay, we'll get one in October, one in December, and then we'll just pause and see what happens. So to me, if the rates are 6.5 right now, I'm going to stand on this. I've been saying it for a year. I do believe that 5.875 is a place that the rates could travel to between now and the end of the year. I also think that when it hits 5.875, I think it touches down there and maybe it bounces back up to 6 or 6 1/8. It's all wishful thinking at this point, but I think there's some sound logic behind it because it's playing out just like we talked. The indicators we're looking at have been spot on so far. Is there doom and gloom out there? Of course. There's still going to be somebody that's going to tell you that the market is going to drop 10 or 20% as far as housing values and sales prices. I don't think so because it's gone up every quarter for the last several quarters. If you're looking at the first quarter of 2025 compared to last year at the same quarter, it's up 3%. The second quarter, same 3%. All year long, it's up 3% year over year. So we're dialing in the right direction towards that maintaining itself. And if anything, as the interest rates get lower, that's going to increase purchasing power for the buyer. So what that means is your monthly payment's going down. And if the monthly payment goes down, you could qualify for just a little bit more. And what I believe is going to happen when you see a 5875 out there, you cross a psychological barrier of rates were sevens and now they're sixes and now they're fives. Well, the eighth of a point is going to make a big psychological difference to a lot of home sellers. And that's where you're going to see the market really start to fill up with some homes going on the market for sale. Because now instead of trading their, 3.875 interest rate, somehow they say it's 3%, or maybe it is 2.875. They say it's 2. We tend to round down when it's the rate that we have. So if we've got a 2.875, we think it's a 2% loan. If it's 3.875, we think it's a 3% loan. When really and truly, that 3.875, let's just call it a 4. And if they're in a 7.125 interest rate, well, they just feel a 7 or almost 8. So we can see with those psychological barriers what it could do. Well, what if the rates are 5.875 and we felt, hey, what's in the fives? And our rate is 3.875, it's about 4. It might feel like a 1% difference where it's a 2% spread, but now it's closer. So if someone was going to trade their interest rate of 3, 4%, and they can get a 5 or a 6, well, a 4 to a 5 sounds a lot better from a 3 to a 6. And psychologically, that's where people are going to play into it. I don't mind trading off 1% if it allows me to move from the house that I'm in, which was really good for me when I bought it, but now doesn't match my current needs, whether it's life or family or work or travel or retirement, any of those things. It gets easier to move on from it. Now, some people are going to keep those properties with the low rates of twos and threes and fours and rent them out long term while they buy the next one. Super good strategy for wealth building in most cases. But as the interest rates travel down into that 5.875 range, which I believe they're going to get there, that should unlock another level of inventory that we haven't seen in a long time. And it might be just a exact right house for you. So I'd be prepared right now. If you got a little lender go bag, get a couple of pay stubs, get the last 2 years tax returns, get a 401 statement, get a couple of months bank statements. That's kind of your lender go bag. Then when they do need to pull your credit, you'll have all the items you need either to email or upload to them, or if you're old school, print them off and hand deliver them. Any of those ways are going to work, but most lenders are doing it online right now. It's actually pretty easy. Even I can do it. So there you go. The tech savvy Ron over here actually can do those things. I'm sure that you can too. What I am looking at right now is there is this opportunity between now and the end of the year where a lot of properties go under contract because new inventory is coming on the market. And before you say, gee, the summer buying season never really hit, well, I think it was delayed because there was a lack of information, a lack of certainty, and now we have a better idea of where things are heading. It appears tariffs are working. It appears that interest rates are going to keep going down. And with that higher level of certainty, I think people will be even more prepared to move and get out of the gridlock and the frozen status they've been in for quite some time right now. Last thing I want to tell you is this. Between now and the end of the year, every year, someone, CPA, is saying, listen, you need to sell off some investment properties and lock in some profits for this year because of a tax strategy, or maybe sell something at a loss because you made a lot of money in other areas. So there's people going to sell between now and the end of the year and close by December 31st. That should be an alert to most buyers looking for a great deal. Conversely, there's also someone that says, listen, you need to go buy something by the end of the year to lock into a tax strategy going into the future as well. So there will be deadline dancers on December 31st of trying to close by that day, either to sell something or buy something as part of a tax strategy. And that will also unlock some inventory. So you didn't miss it if you didn't move over the summer. I actually see a lot of people moving in September, October that swore up and down they would want to be moved before the school year started. Fact is, they still want to move and they will make it happen, and so can you. If you've got questions about what's going on with the interest rates and why they look like they went up just a little bit, it's because they did just a little bit. but that will change in the days and weeks ahead. So just keep watching for that. Definitely, if you haven't done, hit the subscribe button, make sure that you're doing that, and comment below and let us know what information you want to hear about as we continue to move forward together. This is your host, Ron Wojciechowski for the Black Hole of Real Estate.